We do it right. Yeah. From the mountain to the ocean, from the river to the riverside. On the island, we do it right. From the mountain to the ocean, from the river to the riverside. Yeah, we know grandma's house, and now we get to the cloud. We know grandmother, you know my grandma, she like that for real sour. Oh, I love my grandma every hour. Yeah. We do it right. From the mountain to the ocean, from the river to the riverside. Oh, we do it right. From the mountain to the ocean, from the river to the riverside. Good morning, everybody. If you're joining us on YouTube right now, we're doing our live stream. We'll be starting in about seven minutes, right at the top of the hour. Before markets are starting to turn. Right now we got fair value gaps starting to line up. I'm going to initiate a couple of trades on these. I got in about 1 minute. I'm going to start off with just 1 or 2 micros. And then we'll wait till the session, or wait till the top of the hour, and then we'll start. So you see me making trades. It's because the market doesn't care about my schedule. It wants to do what it wants to do. Okay, so we still got about a minute or two. Make sure that every trade you take is within your risk allocation. All right, starting off now. I'm going to set the trades up. NASDAQ entry 24713. Like they were going out of style. It's not a dark song, but I can't get there if I don't start on that song right. It's just so bad. The dogs go ahead. I got these ones set up. No, not close and shade. They think the war right. That contradiction is both fact and fiction, and the difference between the and the night. And if they wanna comes any closer, I just might be in see say okay, and he's just got different skin. It's just so the dogs go ahead. It's just so. Order Hill. Order Hill. Learn fast from the right. Round the side. First wave of the day. Almost got away, but the sailboat caught her. Honey, when you called, I was thinking how good it'd be to see you again. He's in the caution. Come on, yeah. Been here about a month. Where'd the time go? Seemed like we were just saying, hold on just a minute. All right. Good morning, everybody. Get a couple things. It's been kind of a busy, active morning. Get the video going here. A lot of drama in the market, a lot of things setting up. Okay, so as things get underway, as we all see, the markets have been dropping quite a bit. And good to see everybody here. Order filled. And 1 second here. All right, from the top now. Good morning, everybody. Welcome to our live trading room. Today is November 14th, 2025. Hope everybody's ready for a real busy session. Markets are moving pretty volatile right now. Volatility is very elevated. We have some setups on deck, and we're going to initiate those right away. And throughout the session today, once we get underway and the market is we kind of know what we're doing here, we're going to give away 3 $25,000 evaluation accounts, compliments of Elite Trader funding. And important to know that the winners must be on YouTube. Okay, so I'm going to have a couple of quiz questions,
If you want to participate in those quiz questions, be the first ones to answer the question, and win that $25,000 evaluation account. Again, compliments of Elite Trader Funding. They have been doing some phenomenal things in their webpage and in their business to help traders achieve the evaluations, also supporting them to help them make some additional monies. Now, pass the evaluation, move on to the funded accounts, and you can start getting paid off of your trading, okay, with no risk to your personal accounts, okay? Excuse me. Now, if you've won in the last 30 days, give somebody else a chance, but definitely participate, okay? So I'm going to take a quick jump out here. I need to see, we had a couple of trades that set up across the board. The equity index futures are now starting to get a little bit of a lift. Now, some of them are in a demand zone or one of our prep screen zones. So let's evaluate that real quick. Little higher time frame. S&P just came down and touched the prep screen at the Globex low. Okay. And we used the fair value gap entry. So if you're unfamiliar with the fair value gap, you can join us later next week, and I'll teach you a little bit more about how to utilize that when you're looking for that momentum change back to the upside. Okay, so we're long S&P. I'm sorry for the pace of this. It's going to be a little fast right here as the markets get underway. Now, if you are new to trading, keep your position size small. We have a lot of upside potential today, but you have to manage your risk. Okay, so for this initial trade right now, you still can get on board, but remember, place your stop where you need to, 66.77. Okay, now placing your stop there, make sure that whatever your entry is right now does not exceed your allocated risk. I'm starting off with a couple of micros. Okay, our initial profit target is going to be above the dead space area. Okay. So, and then eventually getting back up higher. There's going to be places where we will add on and adjust risk. S&P long entry. Starting off with two, I think I just got 2 micros. Yeah, 2 micros right there. Okay. And my risk is, where we have our risk. Our risk is about $112 total. Okay. So we're not running, risking a lot here. Okay. We're looking to get in at the beginning of a trend. Here we have the NASDAQ, also just 2 micros in that position. Using the fair value gap entry. Risk management is to the session low. Make sure you do not exceed your maximum risk on based on what you allocate towards a trade. Profit objective is back above this base area. This area we call the dead space. It's also an accumulation area. The pictures that we are working with for this particular structure, okay, is basically this, the other one. Okay. So where we are on the map at the moment is down here at the spring. Okay, we have the base. We're at the spring. We're looking for the sign of strength. The sign of strength will then take price back above the base area or the accumulation. Okay. Then the price will pull back and we'll look for another buying point and then look for the markup. This is based off of teachings from Richard Wyckoff. Okay. And a lot of traders have started to utilize this, finding additional ways to enter. Remember, Richard Wyckoff did not have the luxury of minute charts or second charts. He had to learn to read the tape. Okay. That was those big glass domes with the ticker tape running out and something. Okay. That's the term ticker tape. So do some of your own research. Right now, we're in the trade, placed our stop. Okay. And we're looking for price to get back up above that accumulation area. Okay. Just to give you an idea. And we're not loading the boat. There's going to be plenty of opportunity for us to add on to this position once the price proves itself. The initial risk on this trade, and it's important to understand the risk that I put on, is on 2 micros. We're risking about $190 on this trade. Okay. So it's not like we're betting the farm and we're trying to get into a position that's too big for the account. Risking about, based on my account size and what we have going on here, I'm risking about, what is it? About 0.5 to 1% of the account size per trade. Okay. Also want to point out, and this is going to be tricky right here. This is why you got to manage your risk today. The daily chart, we see that price is below the 50-day simple moving average. This is a big dramatic place. And for the last several times, 5 times, today being the 5th, the 50 moving average has held the price. Okay. Now, if you look where the 50 moving average is, 25,076, you're going to see that that takes us back right up into this range here where we have a leg base. It's not a zone, but that's about the area that we're intending the price to come back up and test. And it's right near the 50-day moving average. S&P, also take a note that price is below the 50-day moving average. Price moving back up, 67.47. It's going to take us back up to about the same level. Now, these are not places to take a trade short. Okay. This is an early profit target area. I fully anticipate the price to go back above the dead space area. Okay. Coming over to the Dow, utilize the fair value gap. Oh, we didn't get our entry on that one. Okay, so we're not involved in this one just yet. So I'll have to enter this trade a little bit later. Now, what's really nice about this, and this happened last Friday. Okay, last Friday there was a really good opportunity where all of the equity indexes basically had the same pattern. Okay. Now, this usually leads to a more of a broad market, a lot of participation with banks and institutions coming back into the market. But we still have to manage our risk getting in the trade. Throughout this week, 3 days this week, the equity indexes were not correlated. Okay. They were not correlated. And with them not correlated, it causes a lot more confusion. Other things that stand out that we have also put on our watch list there is that in the pre-market, we saw a pretty substantial drop on the US dollar, the 10 and the 2-year yield. Okay. Since then, they're recovering. We also saw that there was a very strong move up on the volatility index, indicating a lot more fear in the market because of what we see, prices dropping, volatility index, people buying insurance. But we also saw that the trend was high while the markets are dropping. That indicates that the big players were buying into this down move. Okay. Now, it sounds like you're talking this way, there's not a single thing by itself that tells us the market's going up or the market's going down. Okay. It's a collection of multiple pieces of information. Now, the volatility index, if that's all that people are looking at, says, oh, fear, market's dropping, market's falling out of bed. And that's true. Okay. People are fearful. They're running to buy some insurance. But what are the big banks and institutions right now doing? They're buying the other side of the trade. Okay. What you will learn from doing a little more deeper dive into understanding how Richard Wyckoff put markets together. And you start understanding the stories of Jesse Livermore, H.M. Gartley, Ralph Nelson Elliott, and all of those market legends. They watched the ticker tape, they watched the price action. And during the accumulation area is where they started watching. And then they waited for the spring. Elliott participated in the bottom of the spring, which is the beginning of wave one. And you'll see very often, if you go back and document this, that the spring price movement, and that's where we're at now, has a series of 3 waves up, 2 corrective waves, and then we get the ABC pattern, which is the correction from Elliott wave. Now, the very nice thing about and the exciting thing about what Richard Wyckoff did is he studied all of these market legends, kind of like the book Market Wizards out there, okay, by Swaggart. The He studied a lot of those. So Wyckoff was the earlier version of what I think it's Jim Swaggart and Market Wizards, um, what he did, okay. And if you want to kind of do a deeper dive, you could even say that, hey, Richard Wyckoff was kind of like the Dale Carnegie or Napoleon Hill of the markets back in the early 1900s. Okay. And they all describe the same picture when the big institutional traders started coming into play. Okay. This is why we're utilizing this. Since then, in some more modern times here, we have seen that there's been places where traders can utilize a fair value gap. So there's not one single technique that I'm singling out. Okay. I'm utilizing that if price does not enter a demand zone or supply zone, that's what I've designated, then we can often get a bounce, but how would you get into that? And utilizing the fair value gap, also utilizing the principles that Jesse Livermore and Richard Wyckoff, as far as risk management, these are the beginning of some significant moves, but you do not allocate more than half of the risk. Okay. And my risk parameters per my trading plan is about $300 per trading idea. But at the beginning of this, I rarely risk more than half of that. That's why I'm starting off with smaller position size. Why? Well, there's a lot of upside potential in places where we can add on to this. Okay. So our initial target for the Dow right now, I'm talking a little fast. I mean, trying to get you guys settled in and understanding a little bit of why we're looking to go long when the market is clearly looking like it's in a downtrend. Okay. This is where big banks and institutions were building a position. The drop down is basically a liquidity grab. They're looking for liquidity to finish their orders. A little further evidence of that is using the NYSE trend. Okay. Prices dropping down here. Novice traders are selling, big market participants, and the big money is buying. Okay. So still waiting for an entry on the Dow. Trade is already placed, 47,211. And my stop loss will be about 47,148. Now, this is our initial risk on the trade. Okay. Every trade incurs risk. So let's walk through this just real quick here. So I'm just going to kind of explain my position so you can understand what we're doing here. Per my trading plan, let's just do it this way. Okay, so just making that clear, I'm allocating $300 per trading idea. Okay. Uh, Upon my initial entry, I'll only use half, okay, which is 150 bucks. Okay. Now, this particular product, I'm using the micros, okay? This particular product, we got from 47,211 down to 47,148. Okay, we got about 60 points right here, okay, roughly. Well, let's just bring this out. Okay, where's my calculator? Okay, so let's see. 211 minus 148, 63 points. Okay. Now, how much per tick or how much per point is the dollar amount? Okay. Now, on a micro, it's 50 cents. Okay. So 63 points, multiply that by 50 cents per point. That means I have $31 risk per contract. Okay, so if I'm starting off my initial trade with $150 max risk divided by the $31, it says I can trade either round up or round down based on your trade plan, how many contracts. Okay, we'll keep it on a little bit on the lighter side, so I'll round down and we'll start off with 4. Okay, so let's cancel that and we'll change this to 4 contracts. And I'm going to put my initial entry right about that 42.17, just a couple of ticks above it. And my stop loss 47,148. Now, it looks like a big stop. Yes, I agree. But looks are not numbers. Okay. So on this trade, place the trade to enter just slightly above the 42,211. Stop loss. This indicates the risk on the trade. Now, I guarantee any other live stream out there right now is not walking you through how to apply, manage risk, and share with you what we're doing. Okay. It's important for a trader to document, recognize what the risk is per trade so you can stay in the game. Okay. So the trade is set up and we're moving forward on to the next one. Russell. Okay, we're already in the Russell and our stop loss is in place. Let me just recognize that one. And by all means, if you have any questions, have anything that comments, please type in the chat. And in just a few moments, we'll move to the our first quiz question. Okay. So just recognizing you can still enter the trade if you choose, if it fits the criteria. We are using a fair value gap entry. We're managing our risk with the prior session's low, or sorry, this session's low. And we will acknowledge that our risk is about $48. Okay, so if I want, and I think I'll take it if it comes back up out of there, I'm going to add on 2 more contracts because I will not exceed my initial risk parameters. 23.59. We'll just add on 2 more micros. And then I'll come back down here and place my dot. Okay.
Order filled.
There we go. And our profit target is going to be above the accumulation. And throughout this presentation, we will be watching price closely and look for the next fair value gap to participate in. Now, keep in mind, where we're looking at, we have on the map, this is our accumulation area. Okay. And this portion down here is what is referred to as a spring. Terminology from Richard Wyckoff. When you go back and verify a lot of these price patterns, you will see that the spring often has the opportunity where you make that higher low using the fair value gap so you can manage the risk to get into that trade. Okay. Now, there is an earlier entry. We talk about that in our Mastering the Charts recap and review sessions. Okay. If price were to interact with a demand zone in a buy territory, we could get in early and manage our risk based off of that. Or we could use the fair value gap. Every trade incurs risk at the start. Okay. Well, throughout the whole process, actually. So we have a prep screen zone, a little larger time frame. We can see that the potential is good, that there is some unfilled orders down at this level, and we're taking risk to participate in that trade. Okay. So right now we do have S&P, Russell, and the NASDAQ. I believe we have the Dow too. Do we have the Dow yet? No, we're not in the Dow yet. Okay. The other trade that I took and am participating in is Nat Gas. Okay. Nat Gas, the pit has just opened, and we're looking for a little bit larger time frame. We can see that once price starts to break this support area, there's a nice pocket of points for the down move. Okay. Natural gas does have a EIA report that comes out today around 10:30, right near when our session starts to end. Okay. Okay. Crude oil. Now, based on the picture we discussed a little bit earlier, we have the accumulation, the spring, we have the sign of weakness, and at this point on crude oil, we're looking for that selling point for the markdown. Okay. All of these are maps. Now, the maps, we still have to identify a specific entry point and a place we'd be willing to risk or amount we're willing to risk on that particular trade idea. Okay. So for crude oil, I am looking for that move to continue to the downside. I am still looking for the opportunity and the place for us to enter the trade. We just got filled on the Dow. Remember our max risk on the Dow is about 138 points. If we're stopped out, we're just going to look for the next fair value gap to get back in, or we're going to look for a demand zone. Okay. The Dow is the only index future that has not touched the 50-day moving average. Okay. So this is what we're kind of keeping a close eye on. Okay. And hopefully, well, if price does break that and we get stopped out, we will be looking right around a 50-day moving average on the daily chart for potentially a bounce. Okay. May not get that far down. Okay. We'll see. But the risk on the trade, know your risk, do not exceed the risk per your trading plan. All right, we've had a very substantial drop on, we had a nice trade on this yesterday. Right off of the top, we used a fair value gap entry. On 1 micro, we did have a lot of risk. Okay, it was a little stretch outside my trading plan. We had $400 risk on 1 micro per that setup. Okay. Now we're looking as prices come back down into an area Now, if it starts breaking into this, we will see further acceleration, but old resistance may become new support. Okay, as traders eyeball it. Okay. It was pretty much a big landslide here, just dropped. Okay. We'll look for the move back to the upside as this price pattern pays out up to about 41,145. Okay. And if you want an earlier exit point, 41,121. Now, how are we going to get into this? Okay. How are we going to manage risk? Well, let's drop back down to the 5-minute chart. And start looking for the pattern. Now, on the 5-minute chart, we don't have anything yet. Okay. Price did not drop into a demand zone, and we don't have a fair value gap. There's no momentum to push it back up yet. Okay, so we're going to have to come back and monitor that. And there's no place for us to set up a trade ahead of time. We just simply have to monitor it and watch it. Okay. Some other things. Oh, yeah, Russell might have the better move today. And what I'm making reference to is that with the accumulation, price went to the upside, and now we have transitioned below that accumulation area into a demand zone. So we'll look for Russell might be that stronger one. Okay. We do have some, we're getting back down to some levels where we have dark pool transactions. And very often where the dark pool transactions are located on these charts, we do get some pretty significant bounces off of those areas. For the diamonds, the dark pool transactions are much lower. Okay. For the Qs, dark pool transactions are still back down about that 561, and we're pushing through that dead space area. Okay. So anything we get into today is going to be more of short-term trading as the numbers and Bureau of Labor and Statistics gets back online. For the SPY, the dark pool transactions are much, much lower, down around that 606 area. Okay. Now you can go out, I believe TradingView has it. You're saying, well, where do I get that information? That would be an excellent question. Okay. And I believe, yeah, the indicator is just called Dark Pool Block Trades Institutional. So that's where you would find that information there. Okay. Just noticed off to the side here that the market open order imbalance, the Mag 7 is big buy program. Okay. Well, that's no surprise because we saw that we saw that the trend was pretty high, and that's just more validation with the market open order imbalances. Okay. Okay. And the market session is open. So I'm pushing a lot of information out there. We do teach this more in our live trading throughout the week. Okay. Kind of a little slower pace. We do have a community room where we teach a little bit more. And every Wednesday we have the Mastering the Charts recap and review session where we go back over our trade plans and trade ideas. And we show that performance there. Okay. All right, just waiting for my charts to catch up. That's why I turned off the video for a moment. Been noticing, I don't know if you guys notice it at all, but over the last week or so, okay, looks like the Dow just got a little volatility at the open. Okay, so we did get stopped out on the Dow. Okay, but the Russell we're still in, NASDAQ we're still in, and S&P. Okay. So what we're going to do on the Dow is we're going to wait for a fresh new fair value gap to present itself. Then we'll be able to participate. Okay. And if we're stopped out on the NQ, we will wait for a new one as well. It looks like people are panicking out a little bit. Okay.
Order filled.
Okay, so now we're going to get back into that waiting mode. And the waiting mode, as far as the equity index is going back to the upside, it's going to take a few minutes. Okay. Now keep in mind, there was no place to go short. So even though we're seeing the, kind of big liquidity grab, we'll go back out to the larger time frames here in just a moment. Yeah, this is just an all-out panic here. See, what are the novice traders doing? They're panicking. Okay. They're jumping out. What's the reading on our market internals? The VIX is high, fear. Okay, but look, the trend is high. Okay. Trend is high, time to buy, especially when the markets are dropping and you're seeing hard data right here for the NYSE that the big players are stepping in and buying from all of those panicking out and sellers. Okay. We can see that there's more downticks than upticks. Okay. And we saw that over the last couple of sessions that there was some good selling. Okay. So we'll see how this plays out. We'll see if we have any entries to go long. Okay. Right now, trying to take a trade short is going to be elevated risk as well. Okay. Why Russell getting a nice move. Okay, so winner, chicken dinner. Okay, so that covered one of my stop outs, but we're not done. Still looking for the Russell to move up. You might be asking, well, why is the Russell going up when everything else is dropping? Okay. Well, that has a lot to do with the exchange traded funds. Okay. Russell was dropping into a demand zone. Now, diamonds, spiders, and Qs are inside that dead space. Okay. So they still have some weakness. Okay. And it's going to be more elevated risk to try to participate in the upside until it starts proving itself on the smaller time frames. As we're looking for the potential bounce back up, we still have to recognize the bigger structure that these exchange traded funds are working on. See, the all-time highs that they hit was the spring. And now we're looking at the sign of weakness. Okay. Sign of weakness goes below that area. And we haven't got there yet. Okay. So it's still working on that. And feel free to ask questions. Make sure you're not allocating more risk than what your trading plan allocates. Look at that coming right back up. Let's get back over to our charts. And we still got time. Okay, so let's take a look at those. Remember, we're going to try to get in safely so we can ride the move back up. Okay. Give me just 1 second here. I'm going to stop sharing my screen for just a moment because I've got a lot of things going on. My data is bottlenecking. Okay. There we go. Coming back up. And you guys all have your own charts too, so. All right, well, Russell is just rocking away. And now we still have to wait for a fair value gap on the equity indexes. Okay. I'm gonna set those trades up and oh, yeah, we got 2 more minutes for the Russell to set up. My gosh, the data is running really slow. Okay. So the Russell is starting to prove itself by presenting a new fair value gap. We may have the opportunity to add on to that should it pull back. Now that was a massive liquidity grab on that. Okay, so we still have time. We're gonna have to wait for the setup. Okay, so target for the Russell is going to be back up around that 24,000 or 2411. Okay, I don't expect everything to go up in a straight line. Seldom does. And nobody can control what that drop. I mean, you had to have the old crystal ball going at that point, but we did have a place to manage risk. And that's extremely important when we are setting up these trades here. Every trade incurs risk, and we need a way to manage it. And risk per trade should not exceed more than 50% of what you allocate for that. Okay, so our next available entry to add on, okay, would be about 2362 on the Russell. Okay. 2362, we got 4 contracts. I'm going to add 2 more contracts on 2362, and we'll come in at 30. Now, price may not come back there, okay? But if it does, we're ready to add on to that position. Okay, once we add on to the position, the very next fair value gap, we will adjust our risk management. We'll adjust our stop loss up. Okay. How we doing on that gas? And that gas is still doing good. Our gold. Right, gold is looking just like the equity indexes. We have about 4 minutes left for that entry. Okay. Now, gold is down about 3% on the session, and I want to remind you that your stop loss needs to be in the right place for a fair value gap trade entry. Now, give it a little bit of wiggle room. So the entry at 463, stop loss at 431 says that's about 30 points risk. Okay. On 1 micro, that's going to be about $300. Okay. Even just trading a micro, it's going to incur a risk. Okay. Outside of that, give yourself enough wiggle room to let the trade work. Okay. So just acknowledge 63 down to 31, 32 points risk with 1 micro. That's going to be about $10 per point. 31 points, $310 risk on the trade. I'm going to place that entry, 4,063. And then again, put my stop loss, initial stop loss is going to be back at the low of the session. And I need to change that to 1 micro. Stop loss. 4,063.30. Okay. All right, so we have a trade set up on gold. We are currently long the Russell, looking to add on to that position if we're given a chance to. And we need to come back to what we got on the Dow. Woo, Dow went into a zone. Entry 47,005. It's about 70-point risk. So we got about $35 a contract. We're back to our 4 contracts. Buying at the market,
Order filled.
and my stop loss will go at 46,933. Now, I went more aggressive because it came down to one of my zones. Okay. You still have risk on the trade. Let's get back over to the NASDAQ. Got 27 seconds left in that candle. We have created a fair value gap. This is going to incur a lot of risk. Look how big the candles are. Okay. We'll look for an entry, 24,776. Stop loss. Yeah, that's outside of my risk parameters. Okay. It's okay. We're not going to get every one of them. Well, S&P. Yeah, I was waiting for this too, Genji, yesterday. But you know, if it didn't happen by about 2 p.m. yesterday, it wasn't going to happen. And that was the challenging part, is that we waited all day for that long entry when we were trading in the community room, and it just didn't manifest. I kind of was beating myself up thinking I wasted the whole day. But I really didn't. I just stuck to my trading plan. Well, data is really bottlenecking. Give me just a moment. Let me stop sharing. Maybe that'll free up some things there. Takes about 30 seconds. Wow, a lot longer. Come on, charts, keep up. Yeah, this is a killer. Come on. Sometimes talking to them helps, sometimes it doesn't. But hey, while we're waiting, let's give away a couple of those $25,000 evaluation accounts. You guys all ready? Look, got some questions coming up here. All right, there. Question number one, first one to type the correct answer in the chat box or in the YouTube, wins a $25,000 evaluation account from Elite Trader Funding. What year did Jeff Manson begin trading as reported on the market institution web pages? 1887? I'm not that old. Okay. 1997? 1987? Or 2017? What year did I start trading as reported on our webpage? A, 1887, B, 1997, C, 1987. Boy, you guys are dating me here. And D, 2017. So type your answer in the YouTube chat and watch for the team to reach out to you to get you your evaluation count. Yeah, I'm still waiting for data to catch up. This is a killer. Testing my patience here. I'm trying to shut down as many things as possible, but it's not. Let me do things. All right, team, I'm going to step out just for a second so I can get everything caught up. Oh, it's coming now, I think. Yes. All right. We are in the Dow. Okay. We got our risk in place. I'm just waiting for my other charts to catch up. Russell. Beautiful move on the Russell. And we still only have 4 micros on that. Okay. Target 2004-11. Price should move through the accumulation area fairly quickly. Okay. Now, markets are moving pretty fast right now and creating more fair value gaps, but nothing is retracing deep enough for us to add on to the position yet. Okay. And gold is just about there. Actually, gold did hit. Missed us by a couple of ticks. Okay. I'm going to come in and buy 1 micro on gold.
Order filled.
Came really close, and what will happen is if it drops just a little bit lower, I'll get that second micro. Once you start studying the fair value gap, when it gets real close and starts to move back up, generally that's a sign it's going to be underway also. All right, so what are we in? We are in the Dow. Target for the Dow, 47,668. Okay. Now it's going to take just a moment or two for the stocks to catch up to what the futures are doing. Okay, so let's come back over to the S&P. Let's take a look at the cash market, which I referenced in the Dow 30. We have now 19 Dow stocks negative over 94 cents. Okay. So that's going to be 38. And we take that 19, multiply it by 2 to get a value of cash. So cash equals about 38. Futures are trading at 44 negative. Okay. So futures are still oversold relative to cash. Yeah, it's for me the research. And thank you for the comment, Matt. It's good to see you. Hey, did you see some of the comments that I put as we're talking about some of the Wyckoff method and approach? I put some notes in there for you in our Discord room. And for those that want to participate in our Discord room, you can look for the link in the YouTube channel right now and be able to utilize that. Yeah, the accumulation area and what we've been identifying is this accumulation area. And if you kind of look at the overall structure and what we're creating is a buy territory, right? We got our resistance, we got the buy territory, but it's not confirmed until price breaks out. But what we're seeing is what's happening inside those buy territories and sell territories where we have an opportunity. This market is just relentless. Okay, so S&P looks like we're trying to get back up above that 50 simple moving average. And I'm not seeing a good place to enter on that one yet. What a springboard on NASDAQ. Now, some of the tough parts about having a trading plan and sticking to your trading plan is sometimes you're watching the market run and you're not in it. Ooh, extremely frustrating. Okay. But for as far as TradeStation and using TradeStation, they have some of the best charting capabilities. So that's why I like to use it. All right, so there's still no entry on the NQ till price pulls back. Okay, our Dow. Remember the 50-day moving average? It hasn't touched it yet. So that is also a possibility. We took the risk on the trade. Price still may come lower to try to test that 50 simple moving average. Okay. That's about 46,849, and that takes us below where my stop loss is at. Now, if you're not feeling the warm and fuzzy and you think it's going to drop to the 50, you're not willing to take the risk, you can step aside and then just wait for the next fair value gap to enter. Russell? Okay. Starting to get that little pullback. That's what we needed. Now, as I've mentioned earlier, from the accumulation down to the spring, and what I'm making reference to is what we see on what Richard Wyckoff was describing. Okay. The spring involves, most of the time, if you're looking to participate in Elliott wave type patterns, you'll find that if you have to go back and find Elliott wave patterns, that all of this information in front of it, the Elliott wave happens from the spring to the sign of strength. And we've just made wave 1. Okay. And we'll look for wave 2 and wave 3 and wave 4 and up to wave 5, and then we'll see more of a correction. So if you're not involved in these, then don't panic. Don't start hitting the button and taking additional risk. Realize where you are on the overall map. Okay. So Russell's doing us a good deed on this one. Didn't stop us out. Crude oil. Yeah, I know where we're at on crude oil. I'm gonna be patient on crude oil and wait for a fair value gap entry. We're using a 5-minute chart to kind of splice into what we see the bigger picture, bigger time frame picture about to do. Okay, I need less risk on a trade, So we'll use a smaller time frame. We'll look for the initial red candle down, a couple of them to give us a fair value gap entry. Okay. Now gas on its way down, big pocket of points on a 60-minute chart. Okay, there's nothing in the way till price gets down to about 4.325 on that gas. Our gold trade. All right, gold came back to the fair value gap. Gave us our entry. We have over $300 risk on one micro. Okay, so that's why I only took one micro. Okay, utilizing the map on the chart. Let's go out to a little larger time frame, 20-minute. Okay, so if we look where we are on the overall map, this is that accumulation area. Okay. Then we had to spring to the upside. That's why we took the trade short from the spring. This is a sign of weakness. So when you bring this back up, you see that we had the base, the spring, the sign of weakness. You start to see where you're at. Okay, so I'm playing a little more higher risk entry because all price is doing is now running back up to the selling point for the big mark down. So these legends in Wall Street, they left some very good details, but you have to dig into their details. Okay. You have to see what they were talking about. They were all tape readers. They read the ticker tape. They saw every price movement and they started associating the patterns with it. Okay. So very nice entry on gold. We dropped down to a smaller time frame, recognized where we were on the map, and now have participated in that. Russell's still getting a good strong move up. And as we look at the Qs and the SPY, we can see all they did was bounce off of support. Okay. This is not a longer term trade. The market still has some weakness. Remember the map. Let's go back to the map. Accumulation, spring, sign of weakness. Oh, well, it's got to go beyond the accumulation area. Then we can look for the stronger move back up for the initial mark down. When you start realizing where you are on the map, you'll trade a little differently. Okay. But you do not need to have your risk management parameters clearly identified. Let's see, the 30-year, the 10-year, and the 5-year are still in the accumulation area. They're creating accumulation on the 120-minute chart. It's back and forth. Do not trade in the middle of this. Wait for the signal of price breaking above the areas or price breaking the low. So understanding where you're at on the overall picture and where you're in the accumulation. Okay. As the big banks and institutions brace for whatever volatility is going to happen with these, we can see that it's not a time to be purchasing those. Okay. And looks like the Dow's giving us a little more heartburn. Okay, bean oil was one that I was looking at. We see the Canadian dollar also like the bonds and the notes. We see there was an accumulation for wheat, and now it's at the spring point. So we would anticipate price going into a fair value gap. We'd anticipate the projection of the move would be back to the downside below this level. Natural gas did have the spring to the upside, had that little retest. That's where I took it last night. And now we're getting back down into the lower levels. After a pretty significant run up. Now, in about 30 minutes, we do have the natural gas report that comes out. Platinum. Looks like much of the drama is over. Small fair value gap, but a ton of risk. So now by utilizing the fair value gap, understanding where you have to place your protective stop loss, properly sizing your position, you may decide that, hey, this is just too much risk for this trade entry. Okay. And if it is outside your trading plan, that's okay. It's not your fault. Don't feel slighted. Okay, so we're waiting for that. And right now, as I'm viewing this, I'm saying, hey, boy, that was a huge bounce. Okay, well, 709 to 671. Well, how many points are we looking at that? Is my screen blank? Oh, sorry. You're only telling me that now? Geez, sorry, everybody. How about now? We up? Okay, taking a little heat on the Dow. Russell. Still looking good on the Russell. Russell coming back to a fair value gap, 2072. Thanks, Matt. Okay, and our entry on gold. Okay. So what I was chatting about a lot was using the map as far as what we've seen here on gold. We had the accumulation. The spring was to the upside.
Order filled.
We saw the sign of weakness. Okay. And now we're catching a bounce off of the sign of weakness. Price moving back up to find the selling point for the big markdown. Okay. I think we got stopped on the Dow. Okay. Let's wait for the next fair value gap, which may take a few moments. Okay, are we adding on? Okay, so we do have 4 micros on the Russell. I'm going to look to add on at 2372. Add 2 micros. Remember, what we're anticipating from the spring level is the Elliott wave. Wave 1 and wave 2 are a simple correction, and wave 3 and 4 often more of a complex correction. And we're looking for that move up. Okay. Our targeted move is above the accumulation. Okay. So the easier entries, if you don't get in at beginning of wave 1, then you have to wait for wave 2 to find the entry. Okay. And often using the fair value gap can be a good place to anticipate that entry. Some other pictures might show a rally-based rally, drop-based drop type pictures, okay? But the fair value gap on these time frames tend to be very useful, okay? And let's bring back over here. S&P. I may have to wait for a all new one to set up. NASDAQ. Now, since futures are a derivative instrument, this is what I'm looking for on the top large market cap stock. I'm looking for, what is their overall direction? What are they looking to do? The market's starting to quiet down just a little bit. As the stocks catch up, where are these centering electronics? Okay, so as we're looking at fair value gap entry, be looking for a long entry back on NQ, somewhere back around that 24,776 area. Make sure you calculate your risk. And you set up nothing on crude oil yet. Natural gas, it looks like it's making a series of fair value gap entries to keep pushing price lower. Our gold. And got the little fair value gap entry, stop loss. We got 1 micro. Now, if you look at what we risk on each one of the trades, it didn't blow you out of the water. Okay. It was a small amount of risk. It was no more than 50% of what you were going to allocate for the trade. Therefore, it's kind of a non-event. You're not stressing that you wasted, you took on too big of a position. You're just saying, okay, I'm done. Let me get out. The important part about managing risk on a trade is that you don't take too much risk, and you have to clarify what is your trading plan. Okay. How much do you allocate per trade? Okay. Some people say, I have no idea. Well, we need to figure that part out. Because if you start getting into the psychology of trading, if you're never risking more than what your trade plan is, or half of what your trade plan is per trading idea. Because remember, we're at the spring on this. We're looking for that Elliott wave pattern to the upside. Therefore, we have to plan for where is wave two. Okay, where's that pullback? And if I do add on, okay, where's my stop loss as I add on? And then once that additional shares or contracts you add on to it, does your stop loss exceed your max allocated trade? Because we haven't been able to adjust our stop loss up yet until the next fair value gap presents itself. So when you add on to the position, recheck your max risk and make sure your max risk does not exceed your trade plan. If it does, just take a quick little profit or take some of the contracts off the table and wait for it. Okay. All right, let's get back over here so we can monitor all of them. What a ballistic move on the Russell. Nothing to do on the Dow. Okay, S&P is coming back down. First fair value gap area. Now, if you've never studied the fair value gap, then you're not going to trust these entries. Okay. And if you're looking at where you should place your protective stop, you're definitely going to question entering at these points. Okay. So I'm going to kind of walk you through that. Let's come back over here. Let's start with the S&P. I'm going to drop this down to 1 micro, just to kind of give you the feel.
Order filled.
Right. And stop loss at 6671. So even with 1 micro right now, I'm stepping outside of my trade plan by about $50. Okay. Now, where we are on the map is we are also looking at a very strong move up. Okay. For the S&P, we have a larger base that's way back up to about 6,900. Okay. The more immediate one and if this trend is going to manifest, okay, we're going to have more opportunities to get in. Okay. And places we can adjust. Now, I wasn't quick enough to get into the NQ. But you can see right where the NQ would have had your next entry. Okay. Now you can still place the trade in case some news or economic announcements come out or political stuff comes out. You could still place an entry about that 24,858 to participate. And if not, you're going to have to wait for the next one, next bus. Okay. Looks like the Russell came down and teased us a little bit, but did not give us an entry yet to add on. Net gas, again, the fair value gap, if you don't know what that is, there's a lot of stuff out there on the YouTube channels that you can find to get a good idea of what that is. But you got to make sure it's in the right location. Anytime you take a fair value gap entry, it has to be in context of larger time frame. Okay, got to understand what you're using it for. Fair value gap entries are mostly around the momentum type trading, okay, versus having a zone entry. And what did we see? A lot of momentum this morning. Okay, so gold, that gas is still working for us. All right, now let's talk about a little larger time frame. Here I have an NQ on a 30-minute chart. And we still got about 12 minutes for the fair value gap to complete. This is why I put on the indicator, it's time remaining in the bar. Okay, time remaining. This is what gives me an idea of how much time I need to wait for things to set up. And got on the Dow. Is the Dow giving us a better entry yet? Okay. So the Dow is starting to get that first big candle coming out. And we just got to let it wait. And then we got to wait for the next 5-minute candle. It's a 3-candle pattern. We got candle 1 and we've got candle 2 forming right now. So we need candle 3 to complete. So we have that fair value gap. But we can prepare for it. All right, now I'm going to come up with a couple more questions here so we can give those evaluations out. Okay. Good morning, Callie. Did you stay in the Russell? You've just been knocking it out of the park the last couple of days on all these. Awesome. All right. Yeah, let's put that one up there. We'll come back and watch. We still got a few minutes before the Dow set up anyways. All right, let's see. To give away our second 25,000 evaluation account from Elite Trader Funding. Question number 2. Are you ready? Which of the following is not listed as course program offered by themarketinstitution.com? Not listed. A, live trading room. B, structured courses. C, mind the gaps or fast track. Or D, algorithmic high frequency market making. So which of the following is not listed in our course programs? Live trading room, structured courses, mind the gaps in our fast track, or D, algorithmic high frequency market making. There we go. So be the first to answer that question. And since we're getting a little tight on time, I got a second one for you. Or the third question. So are you ready? Let's see, are we still in the S&P? Hold on. Okay, that one's working out pretty good. All right, final question for today's $25,000 evaluation account. Now, all you have to do is qualify on the evaluation, then you move over to the funded simulated account as well, okay, where you start getting paid on the profits that you make from the Elite Trader Funding. Okay, final question. Which technical tool does Jeff commonly teach and demonstrate in public videos and sessions? A, Ichimoto clouds. B, Renko bricks. C, Fibonacci retracement levels. Or D, RSI. Which technical tools does Jeff commonly teach and demonstrate in public? Okay. Yeah, Jinzy's been doing rocking this last week too. Beautiful job. All right, so we did get on the S&P, and let's get back over to the Dow. Should be getting close. Remember, place your risk where it should go. If it exceeds what you're outside your trading plan, then do not take the trade. Okay. Make sure you always know what your allocated risk is on any trade. 47,000, we've got 2 minutes left, but I'm projecting out at 47,079 will be my entry, and the stop loss at 46,945. Target is going to be back above. Since this is location of the spring, okay, accumulation, spring, I'm going to anticipate that there's going to be more places for me to add on. I'm going to anticipate the Elliott wave. So we're just starting the beginning of wave one. 47,079. Let's put that order out there. We still got about 1 minute for that candle to complete. Okay, that'll be the entry and our protective stop loss. 46,941. Now, the first few times that you put one of these trades on, and don't chase it, they very often come right back to you. Okay. You do have to witness that several times. Okay.
Order filled.
You have to witness that several times before you start to trust it. All right. So if you have answered any of the questions correctly in the YouTube channel, make sure you reach out to the team so that they can get you the codes, get started on it. I think this is one of the best ways. I wish we had more of these proprietary trading firms that were available for us to work with instead of risking our own capital while we're learning how to put these things together. Okay. So make sure you type your answer into the chat. Okay. Yeah, we do have a promo as well coming up for anybody that's interested in that. All right, markets are slowing down. Russell coming back. We have another fair value gap right there. We be able to add on. You notice that several of these small 5-minute charts are making a high tight base. In a high tight base where you get a very shallow retracement. Okay, and what I mean by shallow retracement, it is usually about a 23.6 Fibonacci price retracement. The shallow the retracement, 23.6, right, which is a square root of 0.618, 0.34, and a bunch of other numbers after it, is a sign of momentum. Usually the 23.6 or the 38.2 are good places for momentum and continuation of the price move. Okay, as this comes up, we've just been holding the 23.6, so we're still expecting more momentum to the upside. Okay, we have to have a very structured way in how we're going to apply the trade. And often that fair value gap within a Fibonacci level can help you with that. Okay, so we were able to get into the S&P. Our stop loss, far enough away. Our anticipated move is back above the accumulation area. I would even set an initial target 1 for this trade. About 6787. Okay. With a Russell. Beautiful trade. Target 2004-11. We got back in on the Dow. Ooh, Dow's got a ton of upside still. 47,668. And remember, you're going to have, this is the beginning of wave 1. And just to kind of illustrate that, wave 1, 2, 3, remember 3 and 4 are more corrective wave or continuation patterns as you make your way up. So usually the first impulse move and wave 2 are very simple and easy. But as we get further into the session, wave 3 and 4 tend to be more complex and they build continuation patterns. So it takes a little bit longer for the continuation to create. And that could be another base. It could be a pendant, a flag, a wedge, a cup and handle, anything that's labeled as a continuation pattern. And the more that you put these together, the more you're going to start to visualize the map. And the more you verify this on the left-hand side of the chart, you're going to be prepared to stay in the trades longer. Now, we just got 4 micros on this. Okay, I'm waiting for a second fair value gap to present itself. Okay, then I can adjust my risk up to this last one. That'll take a significant amount of risk off the trade. Right now, my risk is not moved. It's still down at the low while this has been manifested here. Wow, we are coming to the end of our session for our live trading room. I'll be over in our Discord room. I need to get some trades going myself. So I'll be in the voice channel on our Discord. If we could post our Discord link in the chat for the YouTube folks, that would be wonderful. Anybody that wants to show up over there will be in the voice channel. And I'll be hanging out there to make a few bucks. So let's do a little quick summary. All right, we are on the S&P. Okay. We have a very solid reason why we got into the trade. One of the things that we do here at the marketinstitution.com is where we show you how to get in and manage that risk. Okay. We want to walk you through. Now, sometimes the market's a little fast. Okay. We don't want to risk more than what we allocate per trading idea. Okay. But we like to walk you through the trades. Some days it's a little faster, some days a little slower. Okay. But we are long the S&P. We did get stopped out on our initial entry based off of the market volatility and that little whipsaw at the beginning. Okay, but have since recovered on that one. The Dow, we took an initial stop loss as well with the whipsaw, and we have re-engaged with some micro contracts, maintaining our risk on the trade. Russell, that one was the smoking one today. That one did really well. We had our entry, our stop loss. It did not get triggered. And so far we're building up. Okay. Target, 2,411. Crude oil, let's take a look. We're still waiting on crude oil. Based on the bigger picture, I'm looking for an opportunity to take a short trade back down to about $56 level. And our nat gas. Okay, we just had the nat gas report come out. Price shot down, bounce back up, see if we can find any more sellers. Okay. Our gold trade. Okay, we're using the fair value gap on a small time frame, managing our risk. And as we look at the picture up here and what we have coming up, our bigger time frame, excuse me, let me go back out to the higher time frame. Where we are on the map here for gold is we are coming off of the sign of weakness. Okay. This is not something you're going to hold on hoping it's going to go take out the highs. No matter what you hear, the big players are driving the price down at the moment. Okay. So the anticipated move here is just back up enough to find a supply zone. And then we're looking for the distribution and see we have another accumulation area. So it will be coming back below that low. Okay. If you want to learn more about this, please join us. At least come into the Discord room, hang out with us, kick the tires, see if this is a trading style that you like, that you can connect with. If it is, fantastic. We'll show you how to utilize this and put things together so you can hang out and trade with us. All right. Everybody have a great Friday and trade safe. Remember, don't allocate it. Don't go into a trade greater than what risk you have allocated based off of your trade plan. Have a super day, everybody.